Welcome everyone to the Kendall Report, and glad to be back. Sorry I missed last night. What a day to miss yesterday, right? And today was pretty wild as well. A fair amount to talk about tonight, and I've prepared I recorded a video I want you folks to watch. I wish I could monitor it. Some of the time I wasted getting started, I was trying to figure out how to listen to it so it would trigger me back in, but I know it well. I just made it just a few minutes ago. I'm going to address some longer term thoughts. I did this a while back, so we'll go through that here in a minute. Well, let's go through most of the stuff that I want to talk about after we watch the video. I've got potentially a little bit of a rant. We got into this in the live trading room today, so if you haven't already, just remember, subscribe and hit that like button. And I saw somebody's commenting. I just will say, come on, folks, you're watching my videos. You get 5, 6, 8,000 views and 400 likes. Click the like button. Make the YouTube people like me more. And so do that if you would. But yeah, as we get into tonight's video, I just want to tell you. There's a lot of things on my mind. Some things came up today in the live room, which I'm going to share with you tonight. And I think that the media has done a pretty good job of getting rid of the word inflation. When's the last time you heard that on any reports? There's nothing better than to cover up something you don't want to talk about than a war. And we certainly have that going on right now as well. And so there's plenty to talk about. I'll save that for the rant. Just to look back just for a minute, S&P down 0.7, NASDAQ down 0.3, Russell down up 0.6. So Russell continues to be that strong area in the market I've been talking about. And I'll go into more details when I cover the Russell here in a few minutes. But I noticed a pattern that we've been seeing, and you folks may have seen it as well. We're seeing late selling. So we saw that rip your face off rally, basically 110 handles straight up intraday which didn't make any sense. I'll say that for the rant, but it really didn't make any sense that you block Russia oil in and that's bullish. I'm not sure. I don't know. I mean, it was like a party in Washington, D.C. today, from what people I saw on both sides of the aisle. I mean, they were high-fiving and partying today. It's kind of scary, actually, to see what's going on. And I guess, yeah, well, like I said, I'll save that. But we're really seeing a big cover-up what's real. And we're going to find out, because we got CPI coming out, that we're going to get some inflation news here in a couple of days. But, let's listen to my prepared video, and then I'll come back. And it's about 7 minutes long, I think. But I've zoomed in, and I think I did a pretty good job. And I just want you to have that perspective. Then I can come back and talk to you about a whole lot of things, okay? Let's go ahead and do that. Tonight I'm going to show you a pre-recorded video I did a number of weeks ago. I did a very detailed description of what I thought might be happening, and I'm going to take you tonight back to the event that happened on a daily basis, weekly, monthly, and now it's happening on the quarterly basis, and this is a big deal. Let's get into it. So we'll start off here on a daily chart, and this goes back to the highs when we printed at 48.18. This was the January highs, the first week of January. We saw a complete reversal, and it all started right here. We had a big reversal down. You can see that first week we sold off substantially. So I'm going to walk forward, and I'm going to show you where we are on the grand super cycle, or the longest term cycle that we know at the moment. We're going to go to the weekly chart now, and now you'll see that this last wave up here finished in what I call an outside reversal bar. Otherwise, we made an all-time new high. We took out the previous week's low, and then the following week, what we needed to do to confirm this pattern is we continued to close lower and get that pattern to unfold all the way down till we got 3 weeks in a row, which is typically what we'll get out of this pattern. And then we got a rebound, and we started in now to the month of January ending. So I'm going to take you to the monthly. So we started off with a daily top that turned into a weekly reversal on an outside basis, which means all-time new high. This is what's called a key outside reversal. That signaled a top and potentially a major top. And I covered this in the video before. So let's go into the monthly level now. Now on a monthly level, we got the big reversal down. We closed about in the middle of the range. Typically, I like to see it close at the lower 60% of the range, but we closed at the lower of the range. And now we're looking at February was negative, and right now March is negative. And one of the things we do need to do to confirm this pattern is we need to print down below 41.14 on the S&P cash. And we get that print below that level, we don't even have to close lower. We just can't make a new high from the previous month. And that will confirm the monthly pattern. And what that does then is sets us up for the quarterly pattern, which this is the big dog of dogs. This is the first quarterly lower pattern close that we've had since going back to 2018. And in 2018, it lasted for about a quarter and a half. We rebounded. We had a much different setup. This time, what we're seeing is we've got the outside reversal. Otherwise, on a quarterly basis, we had a higher high and a lower low of the previous quarter, and now we're likely to close below this number, and all we need to do is be able to close below the 45.50 level. So we get to close under 45.50. We're currently trading 41.70. We get a close under that level. That's going to confirm a quarterly reversal. So now we set up to the next level. And I covered this in my first video. What this sets up for now is at least 3 more quarters of lower prices, but we won't know that answer until we get into June. And in June, what we'll get then, if we get a lower close in June, we're ways away from there, right? If we get that lower close, that will confirm this pattern, and then we're likely to start a pattern like where I'm highlighting right here with my cursor that we're going back to 2007 and 8. We got 5 quarters down during that period of time. If you look at the PPMs down below, these are quarterly PPMs. You can see we're rolling over. We're about to penetrate through the first derivative, and we're likely to get confirmations across the board. By the time we get to June, this momentum is likely to continue to bleed off, but we need that lower close to start with at the end of this month or end of March. Once we get that, now all of a sudden we're starting to see a big rollover, maybe like a 2000, possibly like we did in 2008. But I'm going to show you one other pattern here that comes into play. In 1972, we got this rollover, and this is probably more analogous to what we're going through right now just because of the inflation and we're coming into this stagflation era, and this was a brutal absolute decline. My mentor that I started studying with actually talked a lot about this when I first met him. I met him in 1979, and he talked about this period and how brutal it was and what the configuration was like. There were stocks that institutions that stayed long in stocks like Kodak. This was 1979 and 80 when Frank was talking to me about this. And what was amazing about it, these stocks had not made a new high. If you look at the index, if we go to 1980, we were actually making, we had just come through a recession. Ronald Reagan was elected, and we started a bull market after Volcker killed the inflation. So it was coming into 1980, 81 is where we saw a big rally. a lot of these stocks that were hammered in 74, these are old classic, what were called, the blue chip stocks, right? They were not making new highs. And there were a lot of value around the markets. But I think we could see something where we get at least 3, maybe as many as 5 or more quarters negative. But we still need that quarter this month in March to close lower. So if we get that, we get the confirmation, we're going to see a continuation of this pattern that all started from that daily top that went to a weekly reversal to a monthly reversal. Now we're getting a quarterly reversal, the same pattern, right? We're looking right now at 48.18 to 41.14 is the range. And if we can get below that level, then we're likely to see even more expansive move down towards some of these moving averages. And I've been talking about 4,000. There's a number at 3,800. So somewhere the next number beyond that is 3,200. So I just wanted to point this out. This is the update to that video, and I'll go back to my normal analysis at this time. Okay, thanks for watching that. Let's unpack this a little bit further. And you folks may remember some of that. Looks like my microphone is way down here for some reason. How about that? That'll be a lot better. The patterns that I'm seeing here are very significant, and I just wanted to take just a minute to structure that out a little better so that I could zoom in and do some things that I can't do when I'm doing this live. And there's a couple things that I want to talk about, and I think from an economic viewpoint, we're starting to come into a different phase of the markets. This inflation's getting crazy. A buddy of mine called me this afternoon to say, this diesel fuel is killing them, right? I mean, it's just crazy what kind of numbers are out there in the gas, and we know everything that's happened there. But the thing I want to focus on is there's, I think, 4 or 5 things that are happening here in as far as the economy and just the backdrop. I talk a lot about sometimes, looking at the reverse fundamentals, here's what the technicals are telling us. So what's going to make that happen? So let's talk just a little bit. In this particular case, it's fairly easy to see a pretty negative view of the markets. Now, whether or not this plays out, it certainly looks like there's plenty of things to be able to drive it, right? So one of the key things that I have down here is loss of confidence. And I think if I've said this probably over the last month, I've been bringing this subject up over and over again. I think we have a serious loss of confidence in the markets. It's getting harder and harder to believe in just about anything after everything we've been through over the last couple of years. And now we just see all of this rhetoric. If you look at the news stories that are coming out of this war, who knows what's actually happening? I saw somebody say, you don't know what's happening unless you have boots on the ground and you're there, because the reports from both sides are skewed because they want to have the media, not just media, but it's propaganda is the best way to put it, right? So we have this loss of confidence, but the loss of confidence is in the system. It's ultimately starting to come in. That's why you're seeing the big bid in gold finally. We saw gold print up to 2070. That's a big print. I believe that's all-time high, and it's not done yet. And I'll cover that here in a few minutes. But this whole loss of confidence is big. So let's go to next. Let's go to inflation. And I'm going to combine inflation and the Fed. And I believe that the Fed, and we know this, are way behind the curve, right? But the inflation, they don't have any tools to fight inflation. They're going to raise rates. Is that going to happen? We saw treasuries bounce right back. I was saying in the live room today, a whole bunch of stuff normalized from where it was just a couple of days ago. The flight to quality in the treasuries all of a sudden disappeared. The dollar backed up a little bit. saw treasuries getting sold pretty heavy. All of a sudden, everybody's thinking about the Fed again and raising rates, and all that happened. But meanwhile, then we saw the big bid in gold, and there's some other things that continue to be crazy. I could go through a whole show just talking about commodities and wheat and food and all that. And I was talking in a live room, somehow so focused on energy and some other things that are going on out there, and totally missed the we'll just say the grocery trade and the food trade there was sitting right at our fingertips to be able to grasp. It's fairly hard to find something right now that's not played out. So we spent some time just kind of looking through, trying to find those type of things. Next thing, Fed balance sheet, right? What bullets do they have if we do fall in a recession? Or the next thing that I'm going to tie together here is that the banking system starts to get under stress and they have to fill some gaps. Back in 2008 and 9, and even going back to 2020, they were able to fill the gaps immediately. Just step up, pump the money, done. Well, that worked now. If they do that, everybody's going to get hung up on the inflation scenario that's going to back that up. So I think, as we all know, they're really in a tough spot here. I wouldn't want to be Jerome Powell. I think about anything they do is wrong. It's sort of like watching the current administration. Every decision they make turns out to be the wrong decision. So there's a lot of things that happened today. Biden put out there and said, no more Russian oil imports. They don't care, okay? They're selling their oil to China and India and a whole bunch of other folks. They don't care. They can make that up in a heartbeat. So unfortunately, we're doing a lot of things trying to combat or sanction and do those, but the impacts are very minimal. I put a chart on Twitter, I think it was last week, that basically the Russians had completely divested their dollar interest. They almost own zero treasuries right now. So there's nothing they're going to gain from that. So we've got the war, we have the other side of this. I'm going to go on just a little bit longer. The other part of this is that we've got the central bank disruption of flows, the SWIFT system, all of that. The fact that nothing's happened so far doesn't mean something won't break or could break. And I feel like that the authorities and the people making these decisions very haphazardly. I know you got to do something. I'm not saying I'm not in favor of what's going on in the Ukraine. I'm just talking about what the impact is. What's the unintended consequences of what's likely to go on? And they are potentially very huge. And I don't see an easy way out of all these scenarios. I've never seen a bigger cluster. You know how I love these clustered numbers. Well, we get clustered fundamental issues here. I can't even remember when we had anything like this. I was just started in the markets in '79. Paul Volcker was in. I was there during Volcker raising rates in a recession. I think that's what's going to happen again. But we have a much different circumstance. We have a monster debt. And I don't know how this plays out. So I'm not going to go too deeper in this, because you kind of get into, you go so far down this trail and you walk into the abyss. You can't see anything anymore. You can't even start to complicate, look at what might happen, what might not. It just becomes foggy. And matter of fact, completely blurred. But a lot of this stuff is pretty obvious, and I think we're going to have an awful lot to deal with as we go forward. So let's go ahead and take a look at the database. I had a late start tonight, so we're going to go ahead and take a look at the WaveTech database. So as we look at the database, we're at 18.69 bullish. Nothing really going on there, just a rotation. So we didn't get a lot of traction. Roughly 445 sell signals. We got 210, 215 buy signals. So nothing really going on there, nothing material going on at all from that standpoint. And all we're seeing at this level is grinding. I keep telling you folks, and you know this, we absolutely own nothing right now for the most part. There are some reasonable amount of stocks that are still long. I think there's still around 40% of the stocks. So there are places to be invested. There's no doubt. We have a portfolio. I'll bring up just on the screen just to reference it, and it's actually done really well considering it's still 75% invested. It's only down 2.3% on the year. Last year up 27, the year before that up 26. This portfolio has been, we built this back in 2016, and it's one of our institutional portfolios, and it's been growing at a 25% compounded rate for 5 and 6 years. It turned 200,000 into 14 million. It's not a joke. That's real. We actually have advisors using this strategy. They came in at different times, but the point of this is that you don't have to own FANGs. You don't have to have this stuff, but there's still stocks that are working. I'm actually going to go to the point of just showing you a couple. There's no FANG stocks in here. There's no Google, nothing. There's Alcoa, Adobe. You got McDonald's, NVIDIA. So there's a couple, Visa. But if you look, this is like America. It's got 2 stocks from every sector that's out there, and that's basically all that's in this particular portfolio. I've actually got a video coming out that covers this and what the best ways to look at, and especially if you're running 401ks and that type of stuff. So just remember, if you want to find out more, you can go to Kindle Report / WaveTech, and you can find out more about that. But back into where we are as far as everything that's going out there right now, we're really looking at just a grinding here in the database. There's no traction. There's no reason to be buying anything. I've been cautioning you folks on this broadcast for a while now that be careful on what you're buying. I saw some comments that out there from some investment advisors. I was kind of being a troll today, and it's like, stay the course. You'll win. So the buy and hold folks are out there. They always exist. It's amazing that they continue to go through life. They're better than the current administration of hiding inflation through war sometimes. They can put up a lot of smoke screens. The point is that you have to be proactive in running your money. So let's go ahead and let's dig into the S&P here, start to get into the crux of the technicals. So here we are, the S&P. Somebody mentioned, I saw in the comments, appreciate you following the channel at that level, but we've had 2 closes now under 42.12. And we saw this monster rally I referenced in the comments just a few minutes ago, where we went from, I believe it was 2180 to 4180 to 4275. And then we dropped all the way back, rallied back and forth, and then at the end of the session, this is what I was talking about, there just seems to be lots of sellers. So once again, you had a rally. I didn't get a chance to get you the numbers last night as far as the market grid goes, but last night, R3, 42.77, right on the money, 42.75. The S2 was 41.46. The low was 41.38. So we traded just below the S2 number and then rebounded and closed lower on the session again. So this had 3 lower closes in a row. And it looks to me that we still are going to have to probably re-challenge this 4,100 even number. The low overnight so far has been 41.52. In this kind of volatility that we're seeing right now, it is nothing to print down to there. Let's look at the potential numbers for today as far as the market grid goes. And the market grid is suggesting S1 right now is 41.39. We get to S2, 41.07, so that's a retest of the 41.01 lows. This is the futures. That was the low 2 weeks ago. So we're very easily within striking range within the daily volatility for us to get there. And R1, 41.98, and we printed 41.93 overnight. We are seeing a kick up in volatility. It's possible just the way it's been trading. See R2, S1 minimum on the downside, potential for R2, S2. It looks like right now it's completely neutral. We're up 4 handles on the session. Nothing really there, but that's all we can get from looking at this chart. So next market we'll look at is NASDAQ. NASDAQ, same similar formation. The Fibonacci number down here, projections 12,956. We traded down yesterday to 13,103. So we're getting close to hitting that number again. The lows that we printed 2 weeks ago, 13,025. So we're down here testing these lows. Same kind of situation here. Looking at R1, probably S2 max down here, and we could see, I think all of these indexes, at least the S&P and the NASDAQ, has a shot at R2, S2 from a volatility standpoint. And the positive here, we'll call it a positive, is that PPM1 is turning up right now and crosses first and second derivative and is only down 0.19. 0.50 on PPM2, so that could bias us back up towards R2 or so. There's some potential for at least a hesitation here in spite of those closes under 42.12, but there's a lot of risk in this market and volatility for sure. So I would continue to be very cautious when you're trading this market. Next market we'll look at is the Russell. Like I said, Russell managed to close higher, 0.6 yesterday. The PPMs are turning up just like on the NASDAQ. PPM2 is holding support. PPM3 actually is looking interesting, but there's a ton of resistance just overhead up here at 20, around 2004 to 2021, extreme up at 2037. Looking at the market grid just for today, looking at the potential here for a R2, S2 as well here. The volatility is likely to stay high again today. I don't see anything going away. I don't see any kind of resolution to the situation that's around us. So just before we go on, this is a mid-run on the show tonight. What I'm going to do is I'm going to cover the interest rates. We'll talk about the yield curve. Definitely some things going on there to continue to be concerned about as far as the movements. And then we'll go through crude oil, gold, and Bitcoin. So let's go ahead and get into that. So as we look at the 10-year notes here, this is the daily. We've literally been whipsawing around the market grid. We get another RTX sell yesterday, RTX 1.84. We closed at 1.72, 1.872, and that suggests we should go sideways. There was something else that happened is we got a cycle signal for yesterday. And with this RTX sell signal, it very possibly is going to be maybe a sideways pattern, maybe a top. But I think we saw the extremes, unless there's some really big declines again and we start to see the flight to quality back into the treasuries right now there just seems to be folks very skittish and flopping this trade around. Let's take a look at the yield curve. And as you folks know, I focus on the 530s. 530s flattened quite a bit yesterday. We're back to 0.43. The lows have been right now, we've been at 0.36. So we're coming back toward those lows. Hopefully we'll stabilize here, start to see some steepening, but I think this will all be determined by how this flight to quality trade goes. So we go to crude oil. What a crazy market. Let's talk a little bit about the move by eliminating Russian oil. Initially, when I saw that comments that were made today and to do that, I thought, well, this can't be good. But I realized shortly after that, which I mentioned in my comments just a few minutes ago, is that Russia already has all this oil sold. So it's going to have minimal effect. It might take them a little bit to reroute some things, but I think they already have everything sold. And at least, you know, they're not going to be damaged, unfortunately, like everyone thinks they are. And all, like I said, in Washington D.C. today, it was an absolute, it was a party. You know, you got a war going on. You got a crazy guy with a finger on a button, and somehow that we're winning. It's a moral victory to pay lots of money for fuel. And so this pattern is set up here, though, on the crude is what I want to address. We're getting that big volatility bubble. So we're likely to see a fair amount of consolidation at these levels. I expect prices to stabilize, but we saw that down there just below 100 and it blew up. But I think this is going to be where we're likely to see some stability. I was commenting today that we're seeing anything over 120. The market seems to be getting comfortable over there. We did get an RTX sell on a weekly last week, and we're just continuing up. I thought we might see some consolidation, but we did not get that at all. So we're just continuing to see this market move up. 130.50 has been a print high so far in this run. I just want to go over to the monthly. And this is an absolute insane looking chart, especially looking at the secular PPMs here. And this is very substantial from that standpoint that we're seeing this type of acceleration. And this type of, and I've talked to you folks about this before, this type of configuration, the momentum doesn't burn off very fast. It's a secular monthly chart. So we're looking at that rising 10 coming up through the pattern there. We're looking at probably 4-6 months of that moving higher, also suggesting that there's going to be substantial support probably now, at least at best case around the 200-month moving average, which is 100.64. So we're likely to stay well over 100. I think these energy stocks are going to be a place to continue to be involved in. You're going to see a lot of volatility, so be careful. Don't go buying these things. If you own them, you should be able to do pretty well. One of the things that we talked about in Live Room is the possibility of doing some covered rights, selling some calls against some of this stuff is probably the best way to go. At least some short-term stuff, whether you're doing weekly or monthly sales, that might be a way to bring in a little income off of that portfolio and stabilize it a little bit. Just make sure they're out of the money so they don't steal your stock, so you have to buy it back. So let's go ahead and we'll move over to gold. So I'll stick with the monthly chart on gold here for the moment. And what we're seeing is we are breaking above the RTX number, which is 2014. And we just blew out of this pattern, and the upward target was 2072. So we got right to that. I'm going to show you something else on a weekly chart here in a minute, but look at these PPMs. They're finally starting to really get an acceleration. And if that continues, this is a long-term secular trend that is forming. And just like I keep pointing this back, I know I've told you this, folks, before, but if you're new to the channel, it'll be new to you. But I think we're going back to that 2008-9, that rally up. And there's probably some decent mining stocks yet that are still going to be in play here from that standpoint. I think a lot of those have caught up. And we were talking about today in the live room to do like maybe a hack on some of these metals ETFs just to try to see if we can cherry pick some stocks out of those. Let's go to the weekly chart. This is what I wanted to show you here. Is the weeklies had originally had a target at 2011. We blew through that. Here we are now up at, like I said, the high so far has been 2078.80. We're trading above RXT. So if we stay like this, so let me give you that number to note as we, in case I don't mention it again this week, 2046 or better on Friday's close is going to suggest some consolidation up here, which would be appropriate, I think. But look at these PPMs here. These things are absolutely insane in how they're accelerating. These indicators don't actually get overbought and oversold from that standpoint. That's not how they're used. But what happens, and I've talked about this a lot, and I'm just going to bring this up real quick so I can show you exactly what I'm talking about. It'll take just a few minutes. Is what we want to look at is how these typically what will happen is we get this burst in momentum, and it's really interesting. The most powerful signal I've seen, I've been using these PPMs. They were developed in 1984. Okay, so that's a long time ago. I suspect most of you weren't even here. But when this happens and all of the PPMs accelerate, I didn't have WaveTech 200 at the time, but these three here, when that happens, this is the pattern. I've talked about this before, is momentum precedes price. This is the set for the momentum. And then what happens here is these indicators will fall back in momentum, but they'll go into what I call a trend maintenance mode. So all of these primary 1, 2, and 3 indicators are going to get this trend maintenance mode. And what that means is the angle of attack that I talk about all the time, these moving averages are going to be up, and they could be up for 2-3 years possibly. So I would argue that maybe there's a lot of craziness ahead of us from the standpoint of the secular trends that are out there, but more importantly, maybe gold ends up showing up as a true inflation hedge anyway. I know I've been going on and on the entire last year. I've been going on and on about this pattern that's setting up, and this is finally where we're seeing that acceleration. Okay, final market we'll cover tonight is Bitcoin. Bitcoin's acting much better than I thought it was going to. It held some of the support levels down below, and we continue to be in a sideways range. Maybe, just maybe, it's trying to show itself as a alternative asset. We've only seen that a couple times in the past where it was truly a place to go to quality and anything that looked like an inflation hedge or risk hedge or any of that. We've never really seen that happen. But a couple of times. Maybe it's trying to come out. These Fibonacci targets that I talked about a while are still valid. They're up at 62,000, 73.80. I'm just going to mention them. This big swing pattern that's set up here. This is a pattern that I teach in the live room, and I keep telling everybody, if you just know this pattern, that's all you need to know. And you just need to know the trigger points and a couple little details here. So I'm going to draw it in very quickly. Is you get this right here, and this pattern that you see up here, these Fibonacci's are being done off of these two arrows here. They're being calculated from here. So we always talk about length 1 and then length 3. So 1 and 3 will be maybe equal. These are Fibonacci ratios of those, and you can get validations. And one of my old mentors that I had was always, his strategy that he taught me was, if you have objectives on the upside, you want to be selling your position into your objective, especially on these swing trades. So you don't want to wait till it hits your trade. You want to start selling on the way up. And if you can do, whether it's Fibonacci targets or some other types of price targets, you're actually going to be able to take profits off the table. So when you sell a piece of an existing position, you do something else, you lower the risk of the trade. And I show a lot of that details just doing intraday scalping. That's all you need to do to lower a trade. And ultimately, sometimes you just go with a break-even trade, stop on it, and you just let them take it. So this type of pattern here, we have to do a couple things. We've got to get above the center level here, which is a close over 44.744. We'll get above that. Then you're going to get these swing objectives, minimum 62, 73, and 80, just round numbers. Okay, folks, as always, thanks for watching. Sorry I missed last night. I didn't get home until late, so here I am. And I'll be here for the next 3 nights. And those of you coming into the live room, make sure you do that. We're very close to getting these. Every day I think it's the day, but we're very close. We've got a couple more little clicks to do on the trading view indicators, so we're going to have those out very soon. So anyway, thanks for watching. Make sure to like and subscribe. You know the deal. Tell your friends, share them, all that. Have a great evening. We'll see you tomorrow night.